If you're tired of feeling like you pay too much in taxes every year, you are not alone. But here's the truth most people don't know: you don't need to be rich to pay less in taxes. These tips are often missed, but they can save you thousands every single year. So make sure to watch until the end, because your next tax return could look very different after this. Let's start with the basics. The government actually provides ways for you to reduce your tax bill, legally and intentionally. That changes today. 1. Max out tax-advantaged accounts. One of the simplest and most effective ways to reduce your taxable income is to contribute to tax-advantaged retirement accounts. This includes 401ks, traditional IRAs, and HSAs. Every dollar you contribute reduces your taxable income for the year. In 2025, you can contribute up to $23,000 to your 401k if you're over 50, or $19,500 if you're under. 2. Use Roth accounts for tax-free growth. While traditional accounts lower your taxable income now, Roth IRAs and Roth 401ks allow your investments to grow tax-free. You don't get an upfront deduction, but in retirement, you pay zero taxes on your gains. This is a powerful strategy, especially if you expect your income to rise in the future. 3. Take advantage of tax credits. Tax credits are even better than deductions because they reduce your taxes dollar for dollar. Some of the most valuable credits include the Child Tax Credit, the Earned Income Tax Credit, the American Opportunity Credit for Education. 4. Deduct business expenses. If you're self-employed, if you're a freelancer, small business owner, or gig worker, you have access to tons of deductions. This includes your home office, internet, phone, travel, software, and even part of your car if it's used for work. Track everything. Document everything. 5. Open a solo 401k or SEP IRA. If you have self-employed income, consider opening a solo 401k or SEP IRA. These accounts allow you to contribute much more than traditional IRAs. And every dollar you contribute reduces your taxable income. This is a huge strategy for consultants, side hustlers, and independent contractors. 6. Use the home office deduction carefully. If you work from home and have a dedicated space used exclusively for work, you may qualify for the home office deduction. 7. Keep track of charitable giving. Donations to qualified charities are tax deductible if you itemize. This includes not just money, but also goods, clothing, and even mileage driven for charity work. Keep receipts and use apps or spreadsheets to track every contribution. 8. Harvest tax losses to offset gains. If you invest in stocks or crypto, you can use tax loss harvesting to reduce taxes. Sell investments that are down, then use those losses to offset capital gains. You can deduct up to $3,000 in capital losses each year against your income and carry the rest forward. 9. Rent out your home for 14 days a year tax-free. This is known as the Augusta Rule. If you rent out your primary residence for less than 15 days a year, you don't have to report the income. This works great for hosting short events, conferences, or tourists. 10. Track every deductible mile. If you use your car for business, charity, or medical reasons, you can deduct mileage. In 2025, the IRS rate is over 60 cents per mile for business use. That adds up fast. Invest in municipal bonds. Municipal bonds are issued by state and local governments and often offer tax-free interest income. If you're in a high tax bracket, these can provide steady income without increasing your federal tax bill. 12. Shift income to lower tax. Family members. If you have a business or investments, consider income shifting strategies. You can pay your children a reasonable wage for helping in your business. This not only gives them income but also creates a deduction for your business. 13. Invest through an HSA for triple tax savings. We mentioned this earlier, but it's worth repeating. Health savings accounts offer triple tax savings. Contributions are tax-deductible. Growth is tax-free. Here's the bottom line: you don't need to cheat or hide your money to pay less tax. The system is full of legal ways to lower your burden, if you know where to look. Most people miss these strategies because they're never taught or they don't ask the right questions. But now you know, and now you can act. Thank you for watching and investing your time in smarter money habits. If this video helped you uncover ways to reduce your taxes legally, do us a favor and like the video. And don't forget to subscribe to the channel for weekly tips on wealth, taxes, income, and financial freedom. It's not about how much you make, it's about how much you keep. Paying taxes is mandatory, but overpaying is optional. Let me know if you'd like this formatted as a blog post, newsletter, or with slide narration notes for presentation.